Hello, everyone. Welcome to yet another live show. I'm Olivia Higgins, and today we've got an exciting topic for you. But before I go into that, here's a video crafted and created just for you. Enjoy. Welcome back, everyone. Once again, you're with me, your host, Olivia Higgins. And today you're here on Moomoo Markets NVIDIA exclusive because you've heard the news. All eyes on NVIDIA, right? We're talking about the 10-for-1 stock split, but also how it overtook Apple as the second most valuable company in the world, right behind Microsoft. Now, we're going to unpack that a little bit, okay, today, because it's really about education. So before we introduce our expert onto the show, I do want to remind everyone that today's about learning for yourselves. Do not take anything as financial advice, and to take this instead as an opportunity to network and to engage with us. Ask your questions. And also, I'm really excited because we're going to look at the pre and also during a market data on the Moomoo app. So definitely go through with us and follow step by step with that. But most importantly, network with the community right now, wherever you're tuning in from. So with that, really, really happy to have back onto the show from Moomoo Technologies in the US. We have Vice President of Strategy, Justin Zacks, everyone. Hi, Justin. Welcome back to the show.
Hi, Olivia. Good to see you again.
Yes, I mean, we have so many people who are, they know you very well, but for those who don't, tell us about yourself.
Again, I'm the Vice President of Strategy here at Moomoo Technologies, and as part of my role, I'm really involved in understanding markets and offering commentary on markets, and in particular, trying to help investors and Moomoo users understand what's going on in markets and with stocks.
Mm-hmm. So before we go into the actual fireside chat, I do want to know, what is the current status of NVIDIA as of now, Justin?
So it is now trading post-split adjusted. So it's around $120 a share after this 10-for-1 split. It closed on Friday at 1208.88. So fair value today would be 120.89 approximately. It's definitely popular. It's one of the top 10 volume pre-market movers. And it's been doing well recently. So it's up about 26% since the split was announced, and it's up 59% since its recent April 19th low. And the biggest news that we've seen recently from Nvidia is news that the Department of Justice may probe Nvidia's dominance in AI chips, but there hasn't been a lot of. This report didn't give a lot of details, so we're waiting to see what's going to happen with that. But a lot of times these investigations take years, sometimes almost a decade in the case of Microsoft and some of these other ones that have been probed in the past. So it's a slow moving thing, but we will be watching the headlines. I'll be watching certainly the all our news on the Moomoo app, where I can figure out, well, are there any developments in this antitrust case?
Absolutely. I know on June 7th, the stock split took place. We're talking about this 10-for-1 here. Now, I think some of the investors, they're really trying to understand what exactly is a stock split in the first place.
So basically, it's quite simple. It's when a company increases the number of shares outstanding in its stock, and so you're going from, in this case, you're just going from one share to 10 shares. And theoretically, a stock split is going to have no real effect on the value for a company because the lower price is offset by an increase in the shares. So to give you an idea, it's like if you have a pie, you could eat that whole pie, or you could cut it in 10 pieces, but it's still the same pie. Or perhaps I would tell you, you have a $10 bill. And I take that $10 bill and I go to the bank and I change it in for 10 $1 bills.
Mm-hmm.
So now I still have $10, but now I have 10 $1 bills. So this is, how you should be thinking about a stock split. It's just taking it, cutting it up, but it's still the same company.
Mm-hmm. And what are some of the potential incentives that a company would, I guess, believe in, in terms of why would they even start to split their stocks in the first place, and some possible benefits on their end?
Yeah, so a lot of times they're interested in making it more available to investors, particularly retail investors with not a lot of money. So if $1,200 just for one share, that's a lot of money for most people on the retail level. So particularly if you're looking to have a diversified portfolio, and there's also this psychological barrier. There's this
Right.
idea that if it's 1,200, it can't go to 2,400, but if it's 120, it could go to 240. So there's a psychological barrier. And then you're doing this 10 for 1 split, you're also increasing the liquidity. So you're adding, you're going to add a lot more volume. So it'll be really interesting to see, if Nvidia kind of starts breaking some of these volume records, certainly for itself, but we're going to see it in the top volume leaders, I think, almost every day going forward here. It's just a tremendously popular stock.
Right. And so, we're talking about the stock splits, before, we definitely heard these terms trending, but I think with Nvidia and all eyes on it at the moment, and then suddenly they're choosing to go with the stock splits. Like, how common are these stock splits, and are they as common as before?
No, they're not, and it's really fascinating because
Hmm.
in like I think in 1986 there was over in the S&P 500 there was over 100 splits. This year there's been about six, and in 2019 we only saw three splits the entire year, and I think part of the reason is the advent of fractional shares, and Moomoo offers fractional shares, and it's this idea that I can go out and buy a tenth of a Nvidia stock if I wanted. So I wouldn't necessarily need to have that split. So, but I would say it is maybe you're going to start seeing a comeback in splits, and it's not because the stock, because we offer fractional shares. It's available for a lot of people
Hmm.
to do this fractional share trading. What you can't do is trade fractional options.
Hmm.
And because there's no fractional options, options are becoming super popular. And if anyone has been on the Moomoo app, you know that we're laser focused on the options trading market and trying to offer the best suite of features and tools available for options traders. And we know a lot of times options trading goes right along with that stock trading. So if you're doing an option, same thing. The options are going to split 10 for 1, and it's going to make it a lot more affordable to buy some of these options or do some of these or sell options or do option strategies
Hmm.
on the Moomoo app. So I think because of the popularity of options we've seen in the past few years growing tremendously, much greater than stock trading has been, we are going to see more splits.
Hmm. Absolutely. Really important right there, especially related to the Moomoo app. And for those of you tuning in and just joining us right now, do drop in your questions right now, wherever you're tuning in from, especially in the app. Now, my next question for you, Justin, we're talking about the split. I know a lot of investors already jumped onto the bandwagon for this, but for those who haven't, before they do so, what are the details of NVIDIA's stock split and how exactly does it work? It's just to help our investors out there understand.
Sure, it's pretty simple, and I covered a little bit about before. You had a $1,200 stock that's now becoming a $120 stock, and basically the way it works is shareholders of record on June 6th are going to receive 9 extra shares. So if you held one share of 1,200, you will now hold 10 shares, but those shares will only be worth approximately $120, and basically you're just splitting it into 10.
Mm-hmm. Thank you for that. And next question, we got the stock split, but what about the reverse stock split? What is all that about?
Yeah, so a lot of people think these stock splits and reverse stock splits, they are in theory kind of similar, but that usually companies going in different directions. Usually a company is going to split its stock if it has good prospects. If its price is going up, if there's no reason if a stock price is flat for many, many years for them to split the stock. Usually it has appreciated a lot, as in the case of Nvidia, and they want to make it more affordable. A reverse stock split is the opposite, and it's usually a small company that believes its price is too low to attract investors. And particularly when it drops below $1, it can lose its listing privileges, meaning it is no longer eligible to be listed on the NASDAQ exchange or the NYSE exchange. And that's something that a lot of companies want to keep that listing. And so they would be transferred over to the over-the-counter market. And so, one of the most famous, splits we've seen recently was WeWork. And that was on September 1st of last year. And they did a 1-for-40 reverse split. And to give you an idea of saying, they pushed its stock back up around $4. It hasn't gone so well for WeWork. It's down 97% since then, since it did the reverse split. So here you could see that reverse split didn't work so well, and it was delisted anyway several months later.
Thank you for that, and also for the example. Now, for the next question, we have so many people thinking of making that next move, especially with their current strategies. Now, should investors buy a stock just because it's split?
Yeah, and so this is a kind of a question that has both a yes and a no answer. The split itself doesn't mean much. Again, we are going into talking about taking a $10 bill and making it 10 $1 bills. But what they have seen is, and they've done, I saw this Bank of America study that they did and said, generally over the next year, when a company announces the split, it does better. So again, there's a big difference when Nvidia announced it. Again, it's up 26% since it announced it, along with great earnings. So usually they're announcing these splits into great earnings, or they have good prospects, because a company doesn't want to go ahead and split their stock if they feel that it might drop significantly in the near future. They have to have a good outlook going forward. So sometimes you do see this, but the question for investors is, when do you catch it? You got to catch it before they announce the split, so you don't know when that's going to happen. So that makes it a chicken and egg type thing. So when you're actually going and saying, yes, Friday, do you want to invest in this stock split? It's not going to mean much. And you do see contra examples. And for instance, Tesla split their stock, and everyone thought, well, everyone thought they were going to split their stock for a long time. And it actually fell about 12% in the year after it announced a 3-for-1 stock split back in 2022. While the S&P rose about 8% over that same time frame. So it gives you kind of an idea that it doesn't always work in your favor just because a company splits its stock. And what you really have to be aware of is, if it's already run up after the announcement, and now here we are today and it's splitting, you might see a little pullback.
Great. Thank you for clarifying some of the misconceptions surrounding this. And also, as always, right, to our investors listening, really tread carefully and make sure that you make an informed decision for yourself. And that means also listening to live webinars like this and educating yourselves constantly on the app with our Learn tools available for you. Now, Justin, we're always looking into the future, right? We do a lot of these earnings live webinars, and definitely stay tuned to those listening right now. But, are there any other big upcoming stock splits that our investors should be looking out for?
Yeah, there is one. In fact, it's probably, I don't think I've ever seen a split so big, and it's Chipotle Mexican group. And they are a fast casual restaurant chain here in the United States, and they offer Mexican food. And they announced all the way back on March 19th a 50-for-1 split. Really crazy. Its stock, to give you an idea of it, where it closed on Friday, $3,169.02. And if the split would be effective, then it's not going to be effective until June 26th. if it was effective, then it would go down to a $63.38 stock. And so just to give you an idea of like, okay, can I go out and buy a $3,000 stock or a $60 stock? There's a big difference. This is the first stock split in Chipotle's 30-year history. So it's pretty interesting to see how people view these things, and it'll be interesting to see the performance itself hasn't been like a Nvidia. We've seen it up about 9.5% since the split. It saw about a 3.5% pop right after the announcement. So and meanwhile the S&P is up about 2.3% since that announcement. So maybe a little bit of outperformance. And again, the split hasn't happened. So I'm waiting to see what will happen. But that's the next one. If Nvidia's on your radar for today, and Chipotle should be on your radar for June 26th.
Yeah, I mean, towards the end there, you also summarize, what you talked about previously with the psychological barriers and also just different perceptions, right, of the stock splits, and also different directions taken on by the company or even the management themselves. And we've got a lot of questions coming in. Keep them coming, because I'm going to pick out the best ones towards the end. Now, Justin, we're just at the tip right now of a market opening. Now, I do want to go into the app to look at live data for our audience members tuning in from all over the world. So what can you tell me about NVIDIA's stock page on the app, and also certain indicators they could potentially look out for when they want to understand the split and the stocks?
So I'm going to pull up my phone here, and hopefully everyone that's watching can see it on the screen there. And so this is just the homepage of Nvidia, and you can see the price up there moving quite quickly, and it's kind of right around that 120 level. And looks like it's falling a little bit right now, but it is down about 1%. And sometimes you do see these kind of sell the news type moments, and it may be what's happening in this case. So, everyone knew this was coming, and a lot of people bought in ahead, and now the event's here. What are you going to do? I own 10 shares now. And the other interesting part is people that own one share might not have sold one share, but now that they own 10 shares, maybe they want to sell one or two shares. Maybe they want to keep it. So maybe you're seeing a little bit of pressure there. And so the great part is, we're already seeing 20 million shares already, and it's like 2 minutes in here. So we're seeing, a lot of volume. And then, looking a little bit further down on the app, I want to go to the comments here, and we ran a little poll with our users and saying, is the stock split a bullish or bearish signal for Nvidia? And 84% thought that is bullish. And so, you really have to get in. And again, is it the announcement of the split that's very bullish, or the split itself? And here we go. We're already green. We're going green. This is very interesting. We saw a little sell off very quickly. Now it's going back on flat for the day. And again, the stock split, again, it's just taking one thing and chopping it in 10 pieces. And maybe people are thinking, well, there's not much change here. The interesting part, if you go back to the chart here, and we go down a little bit further, and we look at these interpretations of indicators, and here we can see, again, although our users are quite bullish, they're a little bit, the actual technical indicators on a 1-month basis are showing a little bit neutral. And then if you look on a 1-day basis, they're even a little bit bearish. So it is something to be a little bit cautious here. Everyone is, really interested in Nvidia and its prospects, but the stock has run up a lot. And this is where I will go a little bit further up, and I would go to the news tab. And I just want to kind of see what's kind of going in on the news, what the kind of the focuses are. I slip over here to the ratings. What I like to see what the analysts are doing. So I pick on this news tab here, and they give me a little bit of an idea of, it looks like Susquehanna was up, increasing their price target from 1,200 to 1,450. Well, now this is 120 to, they're a little bit late in the game there. They need to adjust that split, but I'm sure that adjustment will be made very shortly if it hasn't already. So I want to go back a little bit and go to the company tab just to the right of the news tab, and show you here right below the earnings estimates. You can see these impressive earnings. 260% revenue growth, quite crazy. But right below there, the analyst rating. You click in there and you could see what the analysts think about Nvidia, and we do see some really strong buys here. 93% buys. This gives you the idea of the target price here, really a great graphical representation. And then going in, you can look at each bank, which I love to see. Maybe you have a favorite, have a favorite analyst that follows semiconductors a lot. And, that's an interesting part to really get in there and say, you can watch these guys on TV. Sometimes you'll see them even in the Moomoo app, what they're talking about, which ones you like. So you can follow the analysts because they all have different opinions, right? So not, again, only 93%, even though that's a lot, but each of them has a different price target. So you can go through there, see what their targets are. Here you see TD with the 140, a lot there, B of A, 150. And so, most of these targets have now been adjusted. We see Goldman hasn't quite been adjusted yet. So, those are some of the great features we have on the Moomoo app, and it's so nice to have everyone get in there and see what's going on.
Mm-hmm. So, Justin, thank you for that. Very comprehensive. And we have a few questions related to the app, and it's great that we're seeing the live data right now. But I think the first question is about calculating the dividend payout after the split. Now, could you just show us how that works?
Yeah, so the dividend is just exactly like the stock price. So the dividend will be cut in half, or sorry, cut in 10. So it's cut in 10 pieces. So
Now
if
in
you have
10,
a
yeah.
10-cent dividend, it now becomes a 1-cent dividend. That's how that would work for Nvidia. Just exactly like the stock price. So the
Great.
dividend yield itself is going to be the same type of thing as before. So that's the important thing to remember about that. And here I'll pull up the app again. If we could put the app up again, I can show the dividends here, and you can see that the payout ratio is 1.34%, and it shows you the dividends per share and the dividend yield below there, and that you can track that right on the Moomoo app.
Mm-hmm. Thank you for that. Now, next question is about the management and founders, right? So, of course, NVIDIA, the CEO is definitely the talk of the town, especially on X or any other platform like Reddit. Now, someone would like to know, is it a trend that founders and senior management sell their shares before the split? And would that be a part of the creation of a negative sentiment to the market, or does it go both ways? What do you think, Justin?
And so here again, I want to show you, if you could pull the app and show them on the app again. I pulled up the NVIDIA page, right? You go to company and then shareholders, and here you can see insider activity, and you see 7 bullish insiders and 15 bearish insiders. And if you click on the bearish insiders, you can actually see exactly these insiders. So here, here we see what people are doing or plan to do with the price they sold it at, the number of shares they've traded. So what I got to tell you about this is it's a very complicated type thing. So when company insiders are selling, the split generally doesn't matter. They're not selling into a split. They may be selling into a price appreciation. And sometimes this is just for things like tax planning. They have to pay their taxes. Maybe they want to buy a home. Maybe they want to diversify. So a lot of these people have almost their entire net worth wrapped up in a stock like Nvidia because it went up so much. So they may think, well, I still like the company's prospects, but they want to be able to buy a home or do other things with their money and diversify their portfolio. They're doing estate planning. There's lots of reasons they could be selling. And so what I always look at is a lot of these people are selling on a regular basis a small percentage of their entire holding. So if they're selling 1% of their holding, I wouldn't necessarily read too much into that. What you really want to look at is if some of these big names executives are selling their entire stake or more than 50% of their stake, that gives you an indication that maybe they don't think the valuation of the company it maybe has gotten ahead of itself. So those are the types of things. And looking here at the types of shares traded, they're not huge numbers in terms of what we're seeing. On the flip side, it's also really good and probably more insightful to look at the insider buyers. So I look at the bullish indicators on who's actually buying, because to me, that's going to be a bigger indicator, because people that, they're gifted these shares and they're part of their compensation. So they're always more likely to be selling them than buying them. When someone goes in, if you already have a lot of shares and it's part of your compensation, then you want to buy more shares on top of that. That's called, the insider buying. That shows you that the management or the, executives think that the company is really undervalued. So when I see a lot more, insider buys than sells, to me, that's a indication that, the executives think it's really undervalued. If you're seeing a little bit more sells than buys, that's kind of a normal situation. When you're seeing all sells, no buys, and huge amounts of sales, that's generally might be considered bearish.
Mm-hmm. Thanks for that, Justin. Now, I do have a question. Next question is related to, for example, the companies associated with the AI chip maker, right? So you're even talking about tracking the chip index, or even the supermicro computer, which sells AI optimized servers built with NVIDIA chips. Now, what are your insights related to this, and how can investors also, you talked about diversification, but how can they really expand beyond this stock split and also try to look at other related companies to NVIDIA?
Yeah, and so we certainly have the industry chain is a great feature on our app that people use to see how all of these stocks are interrelated. And obviously we have this possible antitrust case coming up, which may open the door for other companies, the AMDs of the world, and so, in a host of other companies that are involved in AI. And so a strategy some people now could use with this post-adjusted split is exactly what I was talking about. If you own a share, maybe now you own 10, maybe you sell one or two, and you're going to buy into some of these questions, or you're going to buy into some of these other stocks that may benefit if there's some competition. And we have a stock screener on the app that people can kind of look at and see what other stocks are in that space.
Mm-hmm. Would you like to quickly summarize and show us on the screen on the app?
So here's my watch list, and then you can go into here and you can scroll down. Give me 1 second to find this on the app, but here's one for high dividend yielders, and just gives you an example of the types of screens that you can run. But you could run one for AI type related ones. And again, here's another real interesting feature is the heat list. That's something that a lot of people look at, and so you can see here Nvidia #1, but the industry chain is one. And so you can click on here, you can see Chat GPT, for instance, has an industry chain, and you can see how everything looks in there. If you look at the infrastructure, maybe you're interested in, again, these infrastructure type companies, and here Nvidia is one of them. In Intel, we see AMD, I mentioned, Alphabet is also in there. So you can see all the companies that are related to AI and Chat GPT in this case.
Mm-hmm. Thank you for that. Next question from the user in app as well. So they're talking about the similarities between Berkshire and also NVIDIA. Now, what are your insights related to this?
Yeah, I think some people were like, well, why shouldn't they just have another NVIDIA.B class
Mm.
share just like Berkshire has? And they decided, well, we don't want to split the stock, but we do want to make it more available. So they added another class of, Berkshire B that's much cheaper and even now Berkshire B is quite expensive. But Berkshire is, its own kind of animal and its own kind of stock. Very few executives are going to go on record and say we're never going to split the stock. So usually a stock split is just a much easier way. It's just really complicated when you get in and say, okay, now should we have Berkshire's Class C? And then if every single stock did this, it would just be a mess. Like you just have all these stocks at all these different prices, and it just wouldn't make too much sense to do that. Berkshire is a very specific case.
Mm-hmm. And we see a lot of these talks, right, and sentiments in the community, right? And people are giving their own insights and your thoughts. Now, are there any particular techniques or ways that maybe our investors can really try to focus on the priorities or what they're choosing to invest in, and educating themselves properly? I mean, you've gone through the app, you've gone through the fundamentals, but any other advice for the investors who are planning to be a part of this stock split?
Yeah, I think the best advice I can give is just to really try to understand what that stock split means. And in the long run, you really want to focus on fundamentals and not worry about stock splits, because stock splits, they could be, like I said, the announcement itself could be an indication that the management has good prospects in the near term. But in the long run, it's all about the fundamentals and it's about valuation. And so you should use the Moomoo app and understand what the valuation of the company is, what some of these ratios are, what its prospects are going forward, to make that ultimate determination of whether you want to buy or sell the stock.
Mm-hmm. And I know some users are writing in now. If you have any product issues or technical issues on your end in terms of trading, definitely leave a comment down below or email the team for support, because our customer service team, they're always there for you. So definitely we seek your patience on this. And thank you so much for investing on the app and just tuning in today and asking your questions. But definitely leave a comment if you're facing any difficulties, and also leave an email as well to our team so that they can help you out outside of this live webinar. But thank you so much for your questions. Now, Justin, as we round up this chat so that people can go back into their own trading zones, because I know market has opened already. What is that final takeaway as we round up the topic of this Nvidia exclusive, Justin?
Yeah, I guess the final takeaway is, Nvidia has done phenomenally. It's really cornered the market on these AI chips. It's been able to reinvent itself from gaming to blockchain, and now to AI. And people are really excited about it. But please do be careful with the how much you invest, and make sure you think about building a diversified portfolio that contains a number of different stocks. And if Nvidia doesn't do well in the future, you don't know what it's going to do. That you do have some other stocks to fall back on. Just throwing everything at one stock, whether it's Nvidia or any other stock, is just not generally the best idea.
And that was Justin Zacks, everyone, President of Strategy from Moomoo Technologies, tuning in directly from the US. Thank you so much, Justin, for your insights. And of course, see you for the next show together. Now, to everyone tuning in, again, you can drop us an email and our teams are always here for you. But definitely check out the replay of this show wherever you're tuning in from when it's made available from our teams, okay? So we're always constantly crafting, curating content just for you. So if you want to see a part 2, a part 3 of this, type in yes in the comments down below, or ask me any questions, because we want to see what you want to know for the next live webinar content. And more importantly, here are some QR codes for you to scan if you want to follow Justin Zacks or myself and leave any messages or comments for us, because we're always looking at the next step, the next show to craft for you, okay? So leave us your comments down there or any other insights you thought from the show, and we'll definitely track it from there. Scan the QR code for more. Definitely keep track of your own knowledge, skills, and base, and keep learning and keep accumulating the knowledge for your own investment journeys as we guide you through it as well. So, see you for the next show together. Once again, I'm Olivia Higgins and wish you a great day ahead.